I want to speak with Steve Wesley, founder, managing partner of the Wesley Group, former board member over at Tesla, and Nishit Madlani, Auto's managing director at S&P Global Ratings. It's good to see you both. So, Steve, we got in those numbers, 462,000 plus. It didn't meet the whisper numbers, but it did show growth, right? It was the first rise in quarterly deliveries this year, and there's a lot of high hopes on the Robotaxi event. How high are the hopes on the Robotaxi event? Does this need to knock it out of the park, this event? Because it got pushed back from 8-8
to 10-10. So look, Tesla's going to eke out the number one spot this year. They've sold 463 pure EVs in Q3, on track for 1.7 million, maybe 1.8. BYD right on their tails, 443,000 battery electrics in Q3, probably ends up the year 1.6. But the big story here is BYD sold a record 1.1 million total EVs. EVs plus hybrids, they're going to outsell Tesla over 2-1. So BYD is really propelled by Tesla. BYD also 21% growth this year. It's going to be the first year in Tesla's 17-year history where they sell fewer cars year over year. The only thing that's going to keep them roughly flat revenue-wise are their energy sales. Now you come back to the Robotaxi event on 10/10, and Tesla is betting the farm on this one, but the reality is Waymo is already licensed in 5 cities. They're growing like crazy. They can go 17,000 miles without a critical event. Tesla goes between 13 and 140 miles between critical events. They seem to be a long ways out. The question is, can they find a higher gear? Can they catch up with Waymo? We'll find out on October 10th, but I think this one could be a flop for Tesla. We'll see.
Boy, that doesn't sound so solid. I have to say, it sounds sort of skeptical. Nishit, what are you focusing on when you're looking at, obviously, the books on Tesla the most? Tell me a little bit about what your mind is on when it comes to Tesla.
Yeah, no, first of all, thanks for having me. So look, I'll say yes, the production and delivery numbers, the pace of growth is slowing down. Anyone following the world of EVs in recent quarters, it shouldn't have been much of a surprise. What's pertinent is that even with this slowing pace, they do appear on track to meet our ratings expectations. We were expecting annual delivery run rates to be just over 2 million by sometime next year. So they look as if they're on track. We tend to be more conservative, had baked in some softness. And one thing that I'll point out is that the growth for EVs in North America and Europe has been slowing. They've lost a lot of share. Model 3 has lost share in the US. The Cybertruck is still in the early ramp phase. But what we're focused on is that relative to the Western automakers, China may not be as big of a negative, right? Because Tesla has been pretty proactive in terms of attracting customers through leasing and financing terms with zero interest financing and very good insurance offers in some cases. So I wouldn't be surprised to see some more stability when they announce their Q3 results, at least be less of a negative versus the US and German automakers operating in China. So that's one aspect of the business that we focus on as well.
Yeah, understood. And we think about the China tariffs. And by the way, you mentioned the Cybertruck. Actually, there were some recalls. There were 27,000 recalls for Cybertrucks to actually fix a camera issue. I mean, I just wanted to throw that in there because that is today's news. Truist put a hold rating, maintain their hold rating at a 236 target. But you did mention, Steve, the energy sales. Recently we saw Elon Musk posting a home with solar panels that look more like a roof than solar panels as we know it. We think of Tesla as those vehicles themselves and how they can charge a home, almost work as a generator. You said energy sales, because we always thought that folks would tell me Tesla was trading more like a tech stock because of its AI capabilities. Is it trading also like an energy stock because of its energy capabilities? Tell me about the energy sales you're expecting. How big could that be?
Well, you've touched on the big issue. Look, they've got a long way to go to show that they're a tech company. They've got to get the AI working. They've got to get the distance between critical interventions much closer to Waymo to really get the multiples a tech company warrants. But the reality is, for the last 100 years, you had energy companies over here and auto and mobility companies here. These industries are converging. It is no coincidence that two of the most highly valued auto companies in the world, BYD and Tesla, are also energy companies. And the big picture here is globally, the demand for electric power caused by the increasing use of AI, data centers, and electric vehicles is at historic rates. Every utility on the planet is scrambling to keep up. Tesla comes along, selling not just
Yeah, and
gigapacks, but their
Nisha,
power
just
walls,
yeah, yeah.
and
Nisha,
they've
we
become
just
a
have 10
major
seconds
energy
left.
player.
Yeah. I want you to give me the final thought because you said it's the long-term vision of Tesla that's key here.
Yes, I mean,
So I
regarding
think,
the Robotaxi day, sorry, go ahead.
no, please.
Yeah, no, I was just going to end with saying that, the fact that they have this pretty important event next week, the way we look at it is for most automakers, these investments have been a drag on credit quality. So how their capabilities are positioned towards eventual monetization and can they get positive returns on that invested capital? I think that's going to be a big one because if we believe that they can solidify their long-term vision to what we think could be the next
Okay.
transformation chapter, the Model 3, Model Y was a big deal.
Right.
This could be the next one, but we'll have to see next week.
Okay. All right. Look, and this event's a big deal, as you noted, 5 cities for Waymo and how far they can go without incident and such. Steve Wesley, Nishit Madlani, thank you both for being with us.